Hi guys, welcome back to Marantz. Rantz, plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. This is a one-take session, no edits, no cuts, about OPENDOOR. Now, if you know about OPENDOOR Technologies, they've had different names in the past, but OPENDOOR, believe it or not, hey, no edits or cuts, right? There you go. So, OPENDOOR, it's the number one stock traded right now on the stock market. Everyone's looking at it. Everyone's talking about it. Record-breaking short squeeze coming. And then we're also going to look at a video. I'm going to give you all the stats, all the info. This is a very deep dive into OPENDOOR and why I personally will never invest into a company like this. Certainly, I only invest into GameStop. You know, it's one of those things where people try to put you next to GameStop. I saw a video right now talking about it was a month ago that they made this video saying this is not like GameStop, it's not like AMC, this is a company that's making a turnaround. This is more like Carvana. Right away, people want to put themselves next to companies that are just stretched out on debt and they're making a rebound. And even that, I think, is not going to work out well. But you know what? The proof is there. So let's go ahead and talk about it first as we go into it, okay? Let's look at the chart. I always have GameStop up on the chart. I apologize. But let's go ahead and type in open. Now, OPENDOOR is a little different. I'll tell you why it's different. You have $5.27. Book value is around 86 cents on this stock. If you guys don't know about this stock, it was a SPAC, and that was from Chamath. I know you guys know who that is. It's widely known as a SPAC guy, but you'll see here these are historic highs before, double top, broke off on the bottom. Now we double topped again. So could this be the breakout? With all the momentum in the world, yes, it can be. It can take you anywhere, but the RSI is burning hot on the weekly, and it was once all the way up to $39. This was during the SPAC days of the 2020, 2021 craze of SPACs. Now, stock comes out. A lot of stuff happened here. A lot of fundamental stuff happened that it's like a setup for what you see today. Stock hit rock bottom at 50 cents, and then it starts going back up. They actually had got a letter and said that they were going to be for dislistment, right? They were going to be dislisting the stock and delisting the stock. Wow, I can't even talk. Good morning. So I want to show you this guy right here. He's pretty hyped up about it. But remember, YouTubers and people out there on Reddit, all social media, they start pumping things to you guys. You guys got to be very careful. I have yet to see anyone pump a stock and be successful. Can we just put that out there? Now, listen, I know I am a GameStop everything. I care about the fundamentals. I care about the product. I care about the leadership. I care about, obviously, even the chart. Sure, why not? But it doesn't matter because I'm going to be in the stock for the rest of my life. I think it's that great of an investment and a company. These things out here are not that. And I've seen this played out before. I've seen the same background, the same lighting, the same talk, the same pace. I've seen it all. Let's watch Top Trader Sam here.
All time. You're that right, my friends, of all time. In today's video, I'm going to be telling you why this setup on OPENDOOR is actually way more bullish than anything we've previously seen when it came to AMC and GME combined. All right, I'm going to be telling you guys exactly why, and in today's video we're going to be also discussing where is this ticker heading and exactly at what level should you get in, should you get out, right? What are some actual realistic freaking expectations to have when it comes to OPENDOOR? Because listen, it'll be easy for me to come here and tell you guys it's going to $150. It's going to $150, right? Like a lot of these YouTubers do, right? And just get you guys amped up. But it's hard, and it's actually beneficial for you. It's hard for me, but beneficial for you to actually give you guys some guidelines when it comes to realistic price projections as to where this ticker's heading. Now, listen, OPENDOOR's a ticker, which about a month ago, right, we made a video on it, right? So I'd made about a couple videos on it, right? Some were bullish, some were bearish. But when it was falling off, at edge, right? And it fell from $5 to $3.50. This is what I came out and I said.
This is not over when it comes to open. This is not over when it comes to open. Now, and yet,
bam, right? Now, since then, I mean, it sucks, but when I made this video, a lot of people bought it. And then it went down to 170, okay? Which it does suck, but listen, in that video as well, I explained to you guys that these are extremely volatile tickers, and you do need conviction when it comes to buying them. So, again, remember that. Even in today's video, anything I say bullish about this ticker, this is a ticker which has gone up. How much has it gone up? Let's see how much has it gone up in the past open stock. In the past month. It's up over 100% the past month. Okay? So, it being up over 100% the past month, you need to analyze this and manage your position sizing correctly. right? So don't go ahead and please don't use anything more than you're willing to lose, considering, again, this is a short squeeze stock, right? Meaning that it has massive upside potential, or they're gonna rug it and they're gonna get destroyed. Now, let's talk about what was I talking about when I was saying that Open Door setup is actually a lot more bullish than AMC and GME. So the problem with AMC and GME was, guys, that the companies, they could not, the hype got the best of them, right? The hype got the best of them, and they couldn't contain their greed. They really couldn't contain their greed. What am I talking about? Well, when a stock is going up, right? One of the reasons why, let's talk about first how a short squeeze even works, okay? So I really need to figure out from what angle I want to approach this at, so I can paint a whole complete picture for you guys. So let's talk about, first of all, how does the stock market work in the first place, right? It's supply and demand. When supply is limited, and demand increases, what happens? Prices go up. That's it, right? Now, here's the thing. How does shorting work? When you short a stock, you sell it and you pray to God that it becomes cheaper so you can buy it back and return it, okay? That's it. Now, if the prices go up and you end up needing to sell it, now you sell at a loss, okay? You predicted it was gonna come down, it went up, you close your position at a higher price. Now, how does that actually affect a short squeeze? How does that create a short squeeze? Because if you're going ahead and you're selling it at, let's say, 3, and you're expecting it to come to 2, but it goes to 5, so now you have to buy back at 5, okay? If you have to buy back at 5, what you're doing there is not only are you taking a loss, but you're actually also creating demand at the $5 level. You're also creating demand for the $5 level. You're now a buyer at the $5 level, right? So what does that do? Well, the next guy that's in the same position as you maybe has to cover at 520, 530, 540, 560, and that's how we get these massive freaking, green boners, right, on our chart that are going absolutely crazy to the upside, right? So that's how a short squeeze really works. Now, what was I talking about? What happened with AMC and GME? Well, what AMC and GME did is that they went ahead, and as the demand was increasing, they messed with the supply. So they added to the supply of the stock in order to raise funds for the company. So they had what's called an offering, right? A public offering, a direct offering, or even a private placement, right? In order for the company to be able to raise funds. You need to understand that the stock is not the company and the company is not the stock. There are certain things that are bad for the stock that are good for the company. For example, being raising funds, like a public offering, like I just said, right? How does that affect the stock, right? Well, what happens is that it adds supply to the stock, and all of a sudden the company has more funds to go ahead and invest in this and invest in that, and maybe focus on research and development, maybe focus on marketing and sales, whatever it may be. So think of it like this: when you own a piece of the stock, right, you own a tiny piece of the company.
Right. So this guy's going to talk about some bullshit real quick. I will tell you this. It is not like GameStop. We know this part. It's not like AMC or any of that nonsense. This is a company that was this close from delistment. This is a company that currently has a market cap of $3.7 billion. So it's not those companies. And what I mean by those companies, AMC managed to raise billions and billions of dollars. You couldn't do that here because you're already diluted. If people don't know about this float, it's over 700 million shares. You can't compare it to GameStop. When GameStop ran up in January, GameStop only had 66 million shares. So do you see the difference? 66 million versus 700 million. There's a massive difference here in volume that's allowed here. Another thing about shorting stocks, I'm sure they made their money all the way down from 40 all the way down to 0. That's where the short comes in. As far as closing out the position at 50 cents, that triggers a little bit of a dead cat bounce, probably what you see here. And then now you put on the fireworks. Now you put on the limelight, meme stock, it's running, it's going, it's all this. Some people are going to catch, a rocket. They will catch it. They'll catch it at $1, run it all the way up to 5, and they made 5 times their money. But what's the risk? You're risking how much? You're going to risk a lot of capital, but just to fall right back down. You're playing in a small window here. Small window to be shorting at 5 and coming down to 1 and vice versa, the volatility of it. But you're telling me this is a great company or a great investment. I had to hear it from Eric Jackson all over Twitter, everywhere. They're all telling me this is a turnaround story. This is a great investment. And I was like, wait a minute. A company that's already done every financial trick in the book is a great investment. But you just said it was a short squeeze, and that's what it is. So either they're a great fundamental investment or they're a short. Which one is it? because most short squeezes are going out the door. You know, because when they squeeze, then what do? Then they sell shares and they dilute at the top. This company can't do that. I'll explain why though.
Correct? Right? Now, let's say that you are a pie owner. Let's say you own a pie. Okay, let's think of this situational company as a cake. Okay, so there's a cake, right? And you own one piece of the cake, right? The cake has 10 pieces. There's 10 pieces to the pie, and you own one piece of the pie. Okay?
I'm convinced they make their videos for investors that don't have a clue about investing. I'm convinced this is why they're doing pie analogies and they're doing all of this. Like, we understand ownership of a company and the amount, but the turnover here for volume is almost 100% of all shares out there, and it generates a run from $3.50 to $5, $1.50. I know $1.50 is a lot of money here. It's about 40%. I get it, but the whole float traded for 40%. I just want to let you know what volume's like for other companies when they trade the whole float. It would be a massive amount of money.
Now, if you own one piece of the pie out of the 10 pieces, congratulations, you're a 10% owner of the pie, right? Because there's 10 slices, you own one slice, 10% owner, correct? Now, let's say that people come into the bakery and you're the only person with this pie, okay? You and 9 of your other buddies. And they're like, oh man, that pie looks really good. Can I get some? Can I get some pie? Can I get some pie? Can I get some pie? And now people are saying, hey, I want a piece of the pie. I want a piece of the pie. So the demand for this piece of pie is increasing, correct? A lot more people want this piece of pie. So what does that do to the worth of your piece of pie? It goes up. The percentage stays the same, but the worth goes up. Now, let's say that the baker comes out with another cake that looks exactly like your cake. What the hell? What the hell, baker? Well, all of a sudden, you're no longer a 1 out of 10 pieces of cake owner. You're now 1 out of 20. Because there's 2 now. You're now
Called
1
dilution.
out of 20
We get it.
cake owners. Okay? 1 out of 20 pieces cake owners. So your ownership went from 10% to all of a sudden 5%. But guess who gets rich? The baker. The baker. The baker is the company. So what we want to analyze is going to be, hey, what are the odds that this baker goes ahead and screws us over? What are the odds that this baker goes ahead and puts out another cake to raise some money?
100%.
This is where, once we do a little bit of digging when it comes to open, we realize why it's actually bullish. So the number one reason why the baker would come out with an extra cake is because the baker is broke. The baker is poor. The baker's also got bills to pay. Okay? Now, how does that work in the company's sense? If the company has financial struggles, if the company is financially restricted and needs the funds, they're going to go ahead and they're going to see this opportunity. I hope my mic is working. They're going to see this opportunity and they're going to be like, dude, I'm buying it. I'm selling these shares. I'm putting these shares into the company. Let me just move my mic real quick. Now it's making me paranoid.
Figure it out, Sam.
All right. Okay. That's not working. Let's stick them together like this. How about that? All right. Anyways, right? So the company's going to go ahead and raise some funds, right? If they need the money. In the case of Open, when you go ahead and you go through their financial earnings, the numbers I'm about to share with you are based off their most recent SEC filings. The company is $272 million profitable every single quarter. They're cash flow positive. They're making more money than they burn.
This is crazy right here. For him to actually publish and say this part, cash flow positive, they make more money than they burn. Like, I've got the quarterlies, right? I've got everything. And you'd be amazed how they're cash flow positive. So free cash flow, just so that we're clear. Operating cash flow, you see this? 823, but we can show you all the losses, right? All these losses. Do you see the big amounts from 2022? Massive losses in cash flow, but this is all because they don't make money. We know they don't make money. But all of this happens to be the fact because it's housing, okay? It's all about housing for these guys. Net cash flow, free cash flow, loss, 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 every quarter. Loss, loss, loss. Gains, right? Big gains, massive losses, and even bigger losses. 5 billion. In this run right here, they lost 700, 2.6, around 5.6, about $6 billion. And you were never going to make it up. And the reason why you're never going to make it up, or you think they're making money, they're actually just doing offerings, convertible note offerings. And that's saying something about convertible notes. But we're going to talk about that in a minute with you. This liar. This is what I call him. This guy's a complete liar, not understanding how this actually functions. You know, they're a housing company, guys. They're a housing company that I can't even show you the whole thing yet. I will in a minute. We'll get all down. But they actually buy houses and flip them, and resell them, and no one's buying houses right now. In 2022, business model, great. You crashed it. You did amazing. 0% interest rates, and everybody came crazy, right? No. Right now, nobody. This is why this company's failing. It's going under. But we'll break down the balance sheet in a minute. But this is embarrassing. This is a flat-out lie about their cash flow. They don't have a positive cash flow. It's not like you think. They actually, I'm going to show you, they have over $1 billion in convertible note that they went ahead and offered. Billions of dollars, actually. And long-term debt that they have to pay back every time. Like it's fluctuating. But the biggest part of this is all of those notes are due next year, 2026. So it's like opportune to do it now, right? Get out here, do the social media blitz, tell you that it's a great company, it's going positive, and all they're going to have to do is do what? Renegotiate even more, offer more shares because they're due.
Now, to you guys, you may think, well, obviously, no shit. But this is not normal for majority of companies. Majority of companies, the way they survive is by selling shares. For example, you know, let's go to like one of my other videos, okay? Let's go to one of my other videos. Because again, right, this is something that I pay a lot of attention to. So let's go to videos. Let's go to, for example, AZTR.
Crazy too, guys. He said $1.
Which I was very bearish on. I said buy it at $1.
Penny stocks, dude. This guy hangs out in penny stocks.
I'll buy it in shambles. The company.
Look at this. The company has negative $700K in the bank, and they're burning 2.94 every single quarter, leaving it with 0 months of cash. Now, this is not a good example because they were so damn broke. But let's go to something like.
Let's do a different example. If they are cash flow positive, like you said, almost $232 million a quarter. Okay, I'm going to play with you. Then tell me why this is the case. Tell me why they only have $789 million right now that we're talking, and yet you come down to total cash, let's see, total net cash, negative 1.3. Why is that possible? How is that possible? How are they losing billions and billions of dollars cash flow, and they only have $631 million worth of shareholder equity? I'm asking. It keeps shrinking. Shareholder equity has shrunk from the days of borrowing all the money that they did and made money, I guess. They didn't make money, but they borrow all this money, $2.2 billion. They're down to 631 on shareholder equity. If they're free cash flow positive, i.e., they actually make money, don't lose money. Because you know what really tells me about a business, just so that we're clear, Sam, okay? And this is not anything personal against you. You're part of the crew. You're part of the crew that pumps out nonsense. Operating income, okay? Now, I'm going to play with you for a minute. Operating income on this company by the quarter, I can go through the history of this company, the lifetime of this company. They've only made operating income twice in the history. Everything is a negative except for right here, these 2 quarters. Boom, $150 million at 6 months back in 2022. Other than that, they've lost money the whole way. Every single quarter, they've lost money operating. Now, this is in the biggest housing boom you ever saw in your lifetime during COVID, right after COVID. Interest rates were 0. Everybody was buying a house. Everybody was selling. You could sell them all off to who? BlackRock, right? You can sell them off to everybody. But let's go down. Let's take out interest because you know they borrowed money and they're paying back the borrowed money. So maybe the net's a little different. Net income out of all the time that this company's been around, $28 million and let's see, $23 million. So they have made a total combined of $51 my boys. $51 million in the history of this company. $51 million what they took home to the bank to pay off what exactly? What are they going to do? Give you equity? Give you some worth? This company is a bankrupt company, and they don't even know. They're operating off of debt, but that debt can never be paid back. It just can't be. There's not even a housing boom coming because who owns all the houses? But we'll get to that. I'll keep letting you lie to yourself. And I know that probably the camera wasn't showing all the numbers that I had here, but you get the gist of it. We'll get back to it. I promise. This video's not going to be short. This is a deep dive into you, Open Door. We get it. You want to talk about these stocks that were free cash flow positive. We get it.
One of them. Ross Cameron's one of them.
So the company has $4 million in the bank. They're burning $2 million every quarter, leaving them with 6 months of cash. So in 6 months, they got no money. But when you compare that to Open Door's numbers, Open Door's not going broke.
Just because you typed it.
So now we figured out, okay, their financial motivations are low. But what are the odds that they can go ahead and do so? Historically, has this company gone ahead and have they diluted a lot? Have they gone ahead, has every time the baker seen people want cake, he's been like, make another one, make another one. Or does he sometimes go, nah, it's sold out, sorry, sold out, yep, come back tomorrow, right? So let's go over here and let's look at the numbers. So historically, they've also not done much dilution. Amazing. Amazing, amazing. Their overhead supply is also low, meaning they can't go ahead and do so right now. The way I like to think about the overhead supply is, does the baker have the ingredients to go ahead and make the cake, make another cake right now? Their overhead supply is low. They can't. Now,
you guys, do you know what that means? Let me show you, okay? Let me show you what that means. All right, that's ridiculous. That's backwards way of talking. The way he's talking. What it means is that they can't do anything. They're maxed out on the coffers. Okay, so I want to show you what he's not showing you. One, it came out the gate extremely large on the float itself. Right out when it went public, boom, 577 million on a float. Yes, it's increased all the way to 735. A lot of convertible notes have gone out, cash, you name it. Now it says here the quarterly operating cash flow of 272, right? That's where you're at. Current estimates, 1.3 billion is what they have, but 272 operate, whatever they say, 169, whatever it may be. So this is your cash position, okay? Cash position of 272. But here's where it's all at. You're looking at around $325 million right here on an offering. Additionally, convertible note here for almost $1 billion. Float-wise, you're looking at an additional 250 million shares. So if I go up to here and I see 735, we're getting really close to 1 billion shares. I'm pretty sure the coffers are going to tell you they only have 1 billion shares worth of that they could go ahead and put out there into the world. When they did these ATMs and they offered all these shares, and they guys, you got all this here. Everything's here. I already looked at how they diluted their shareholders, but there's other factors that go into play with Open Door that people are not talking about. We'll get back to his video in a minute. The board of directors, I want to highlight some people here. Obviously, Adam Bain's one of the original guys who came in with Chamath and Social Capital Holdings. You know I don't like it because he has ties to Twitter. He has ties to companies that are driven by private equity, even Virgin Galactic Holdings, when these are all SPAC plays at the time. David Beeson, is that the guy I don't like? Fannie Mae, well, he took over, Bill Pulte took over for him, so you can imagine how this plays out. But Dana Hamilton, she gave it away for me too. I looked her up. Pretrium Partners, I believe that's how you say it. But if you look at them, and it's right here. So this company that she comes from, and it tells you here, the firm ranked is a private equity international, the 15th largest private equity real estate firm. That's where she comes from. And if you see here, they built it here. Donald Mullen, who was a partner at Goldman back in 2012, and you'll see right in here, Oak Tree Partners. They did a deal with them. They also did a deal with Ares Capital. So, yes, and that's recently, 2021. So, private equity, partnerships, that's Dana. You guys know how it works. I've seen other people on the board. I was following them all, and they all come from somewhere, right? They all come from, like, a lot of Citadel people, a lot of Milken people. But check this out. So, right here is when Dana got into the board in 2023. The minute they come in, there's a little thing that they did here at Open Door. Open Door went ahead and look at this senior note right here. Look at this convertible notes due 2026 right here. Boom, $129 million. Pay attention, $129 million due. That's when it's due. And this came out when? In 2023. Oh, my birthday, November 14th. Cool. So 2023, 3 years later, it's due. Here we go. What are they doing? Gymnastics, right? It's all coming. I looked at the sheet here. Revenue's down 980 in a 3-month period, okay? And I'm looking at every single quarter. You went from 3.3 billion to 980 million. That's a huge drop off. Homes sold went from 8,500 to 2,000. So you lost 75% of your sales. And this is not a company that's going to be able to survive this because of what's out there. They used to lose 425 million. Now they make 96 gross. Gross. You can't run your company off of gross. You have to pay for it. So at the end of it all, they have a lot on the books, more than they had last quarter, and they're not selling them. Inventory right here, 1,311 is the amount, $1.3 billion worth of inventory held on the books, and you can't do it. They're buying homes, wholesale, maybe. That's the interest. It's just laying it in the house. If you can hold on to the house forever, that's on you guys. But look at this. Here's your revenue. Here's your gross profit. Here's your expenses. That's your net. You're never going to make a profit. Never, ever, ever. They're buried. Why would you buy this? Why would you buy a company that'll never make a profit? There's no way out of this. You're on the other side of it. Even their assets go from 6.4, cut it directly in half to 3. They've lost everything in this company. Shareholder equity went from $5 billion to 2.9, but you also got to take out the deficit itself. So you're sitting on what? $1 billion at the time. $1 billion on shareholder equity on 700 million shares of a float. You're talking about $1 plus a share on book. It's trading right now at almost 6 times book. It's 5.8 times book. Yes, overvalued as we speak. I've looked at it every which way. I saw Jason Keller. I saw these guys are all on the board of directors. I think I was looking him up. Jason Keller. Let's see who he was. He's with Roblox. He's with Wealthfront. He's with Media Warner Group. He's been everywhere. I don't like that he's been everywhere, but you know, they want to put famous people in places. I guess they're high up there people. I was looking up all these companies. I had to read about them. I do a little homework on them. Jeff Jordan, venture capitalist, Open Table, not Open Door, but he actually ran it right there. Anderson Howitz, whatever, that group. Where did he come from? Boston Consulting Group. Yeah, those are partners with people on the board of directors right now. Okay, and these guys entered into a separate, privately negotiated repurchase agreement with limited number of holders, convertible senior notes, $279 million on this one. The repurchase is expected to close May 12th. There you go. So you want to know how they got all this cash? I'm showing you the cash, brother. The cash you claim they have. It's convertible note after convertible note. I had to go find it. I was like, man, this is crazy. Here's another one. Another convertible note right here. Boom, boom, boom. More cash. It's going to close March 20th, 2023. Approximately $186 million. Oh, but there's nothing here. We're just dreaming about this. In light of this, oh yeah, they had money at Silicon Valley Bank. It says we only had less than 1% of our total cash, but they did have money at Silicon Valley Bank when it was crashing. But it was covered by the FDIC, so no problem on that. Let's see, which one is this? This is going to be the fourth quarter, full year 2024 financial report. It says total revenue is up 94%. That's amazing, huh? This was like a killer time. Net loss of $1.4 billion, but yet they still lost crazy amount of money. Adjusted net loss of $574 million. They were losing money every single quarter. It did not matter. Key highlights: revenue of $2.9 billion, down 25% versus homes sold in the quarter. That's crazy for the quarter. They were losing it right there. They were losing right there. You can't operate. Gross margin of 2.5%. They lost 500 basis points in gross margin. Now, I like this one, okay? Departure, you reading? Of certain officers. This guy left. Resignation, left. Boom. They got all their money out of it. He's gone. Daniel Mororo, or whatever his name is, Murillo. When he left, guys, you got to know who they are. You got to know who got out of the way. Freestone Grove Partners. Yes, he was the head of quantitative research at Citadel. He spent 6 years at Citadel. Guys, don't worry, he's on the panel at the Milken Institute. Yes, the same guy. Citadel, OPENDOOR, Freestone, Daniel. Who's also there at Freestone Grove? Todd Baker. Todd Baker, Milken Institute. Boom. Speaker. What does he do? Citadel, 17 years. These are guys who were at Citadel who couldn't be Ken Griffin. They couldn't be those guys. What do? They come over and they go ahead and put their imprint on other companies. They build their own firms and they go ahead and infiltrate. And how do you know? Freestone, right here, Grove, raises $3.5 billion. These are board of directors, guys. These are the inside tracks. And how do you know? Because right here, Todd Baker has raised 3.5, right? And you go, oh, wait a minute. That guy just worked at Citadel, the other guy who was on the board of directors at Open. What do you mean with Todd Baker? Well, here's why. Because if you read right here, people familiar with this matter saying Baker and co-founder Daniel Murillo, whatever the hell his name is, didn't matter. Murillo. It doesn't matter. They literally are the same people. They're at the top of this new company. They left Citadel, but they were at OPENDOOR. They were at OPENDOOR just tearing it apart. And then you go through and you see something like this. Remember that he left 2023. January 2023. He left, guys. I want you to see something that I've been seeing at OPENDOOR. I've read every single 8K. I've read every single 8K over the last 5 years, whatever it is. This is the one that let me know, hey, it's a setup. You guys don't even know what you're looking at. On December 22nd, 2022, the board of directors at OPENDOOR, upon recommendation of the compensation committee of the board, adopted the OPENDOOR Technologies, Inc. executive severance plan, effective as of the same date under which the company's executive officers, including the CEO, the CFO, and certain additional key employees, will be eligible to receive severance payments and benefits in connection with certain qualifying terminations of their employment with the company and subsidiaries. Meaning, golden parachutes for every single executive. They have tiers of it. They all played out. I went in, and then you know what you see after this? All you see is director, everybody leaving the company. They gave themselves all that cash. They did all the offerings in the world, guys, convertible notes, millions and millions and millions of dollars. And all they did was leave the company. Eric Wu, Daniel, everybody gave themselves a payday on you. And this is the company you think is going to go in here and make it right for people. I've looked at this every which way. I was like, wait a minute. Are you kidding? They lose money no matter what they do, and everybody's making millions? Then who's paying? Because I'm looking right here. Boom, 2021, $850 million of convertible note. That's like the 5th convertible that I've shown you. Yeah. Then I go here. Notice of delisting, May 28th. When did you start hearing about this stock? When did you start seeing it? 2 months ago? A month ago? Oh, it's a meme stock now. No. They turned it on. They get to turn on that algo on you guys. They get to put it into social media. They get to blast it everywhere. These idiot YouTubers are going to make videos saying it's a good investment. Nah, it's a play. It's a play from Wall Street to you. Look at this. May 8th, 2025. They entered into another convertible note. $325 million. This is what I'm talking about. It's pushing out convertible notes and just money. Who's borrowing money? Who's giving them money? The same people that are making money off of this squeeze that you guys are all entertaining. Right here. Announces second quarter financial results, August 5th. This just came out, 20 days ago, 19 days ago? And everybody's like, man, look at this. We delivered $1.6 billion in revenue in the second quarter. First quarter of adjusted EBITDA profitability since 2022. Isn't that amazing? Guess what? The CEO, Carrie Willer, yeah, she left. Paid. Golden parachute. They don't make money. They're never going to. It doesn't work that way for these guys. This is how you pump and dump on people, guys. You get in here, you tell them what they want to hear. This stock's going to go up to the right. Look at this. You got this idiot who doesn't know how to explain dilution, saying dilution doesn't happen. It's not happening. It's happening right now. It's happening right in front of you. There's notes that are already maxed out on the coffers of what you're allowed to go ahead and have in here. OPENDOOR. The overhead supply is low. And you think that's a good thing. That means they're maxed out. They've already spread it all out to all of you retail investors buying this stock at $4, $5, $3, $2, thinking you're going to make it big.
Institutional ownership sitting at 44%. Amazing. Wonderful. This is what you want to see. This is what you want to see. This is what you want to see. All right. Now listen, this video is running a little bit long, so I'm going to come out with another video giving you guys my price predictions. But let me tell you something. Those price predictions are going to be bullish. So if you want that video, if this video gets over 100 likes, I'll come out with that video before this weekend. Before this weekend ends, I'm going to come out with another open.
You know what's crazy to me, Sam? If this video gets over 100 likes, you're going to give them a price prediction that's bullish, you say. And it's going to be bullish, but you couldn't do it in this video. You have 30,000 followers, and all you're asking for is 100 likes. Go to any video of mine, we got 100 minimum. And I don't even have what you have. My point is, you either bought your followers, 2, you're trying to buy favor with people, but you're lying to people. This stock is not going anywhere. You remind me of every other pumper of AMC, Bed Bath & Beyond, and any other failed-ass company that people pushed out in front of people. You're not GameStop. You're absolutely right. You know GameStop actually makes money? GameStop has $9 billion cash. How dare you put them in the same context, and GameStop makes a profit? GameStop's everything. And you do this shit, what, 1 month before GameStop's earnings? Nah, I'm good.
Open door video telling you guys exactly at what levels you should be looking to take profits, and I'm telling you the answer is going to be a good one. Okay, you're gonna like it. It's going to be a bullish one. So hit the thumbs up button. 100 likes, I'm going to come out with another video. Today's video I was just comparing Open Door to AMC and freaking now let's look at AMC's number. Look at this, historical high. So what does it say historically high? Because all they did during that phase was come out with more shares and 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 come out with more shares. And even their cash need. Look at their cash need. The company only has 10 months of cash left on hand. They have 404 million in the bank, and they got 115. They're burning 150. So look, the company has 10.5 months of cash left on hand based on a quarterly cash burn of 150 million and an estimated current cash of 404. This is based off the most recent SEC filings. Crazy. Crazy stuff. So this video was that, and next video I'm going to be telling you guys at what levels to lock some profits.
So you notice I didn't bring up the income statement or the balance sheet. He didn't bring up any of that. He's just talking cash. Is this company going bankrupt tomorrow? No, great. Then maybe we should invest in it. This is some bullshit. This is what we're doing. This is investing, I guess.
So walk away from the sticker. And 100 likes. That's it. That's what I asked for. 100 likes. That's my price.
100 likes.
Now listen, if you're new to the stock market, okay, or you've been trading for a while and you want some more consistent results, I got good news for you guys. I added 10 more spots for the 50% sale which we have going on in our community right now.
Thank God. 10 more spots. Hey guys, I only got 4 spots left in my Discord. It's going to cost you nothing. It's completely free. Don't worry about these guys. Ugh. All right, guys. Here's my connecting dot for Open Door. It was a play. It was a setup. Everybody got the golden parachute. And now you're going to be left with this bag. Believe it. I'm batting 100. I'm batting 1,000 in the world of baseball when it comes to investing in all of these failed companies. Watch Connect the Dots. This is part 94. I'll see you on the next one, millionaires. Peace.